Some analysts have argued that the Singapore residential market will see a correction in 2014 due to the large stock completion. And an average of 50,000 housing units, both public and private, is expected to be ready each year in 2014 and 15, equivalent to somewhere about 4% of the current housing stock. In our opinion, the residential market will not contract as a result of this growth. Why? Now, firstly, over the past decade, the Singapore residential market has seen hardly any correction based on stock level alone. Despite the large supply that came in 1998, island-wide property prices remain fairly stable. Secondly, the growth in population over the past few years has outpaced that in the physical stock, suggesting that the overall size of national households, including both residents regardless of status, has been rising. Thus, the gap between the short and long-term balances of housing stock is currently wider than in 1998, suggesting that the residual demand backlog is likely to help keep prices steady. Now, finally, immigration is unlikely to stop, as articulated by our Prime Minister Lee in his National Day rally speech. In our estimate, immigration growth this year is likely to be slightly lower than in 2010, at about 2 to 3%, to support the country's fundamental economic growth. Demand for housing is therefore likely to remain fairly stable and support the injection of new stock over the next couple of years. The physical stock surplus over the next couple of years is not sufficient to lead to a major dip in the property price index, although we can expect property price index growth to slow to somewhere about an average of 1.8% at worst, or 7.5% if the immigration inflow continues. Undoubtedly, the current increase in global economic uncertainty is likely to dampen sentiments here, resulting in short-term fluctuations in both demand and prices. Should conditions worsen beyond that of a technical recession in the second half of 2011, we would expect the property price index to drop. But overall, we are confident that the property price index would then recover in the mid to longer term in line with the underlying fundamental of residual demand and new immigration growth.